Good afternoon if you're joining us from Europe. Good morning, my fellow Americans. Welcome to another Vesper Dairy Cafe, our bi-weekly effort to keep you informed on everything and anything that's happening within dairy markets. I say everything and anything, but we do, of course, choose a topic. And today we're going to talk about the fundamentals, back to the basics, the underlying elements driving markets, the amount of milk available to us. Jasper, I saw one of your reports come out yesterday, quite late. I don't know what you're doing. You're a new father. I don't know if you're writing these so late, but you must have been trying to gather all the information and get a good report. You talked a lot about milk availability.
Yeah, I did. Yeah, things pop up throughout the day that suddenly need to be taken care of. No, I promise to always publish on Wednesday whenever I can, but yeah, a bit of a delay for at least the butter highlights. Now, the reason why I talked about milk and a bit about availability is also because it changes rapidly. Like what happens at the last few weeks in midsummer when trade activity and information availability is low. If temperatures shoot up, cream prices go through the roof, raw milk prices move up, skim milk concentrate moves up, not just in Europe, but also US. And we see a lot of sharp changes. And that's also one of the reasons why I'd love to talk about this today. Because I'm not trying to ignore the fact that today's availability is a bit of an issue. If you need cream, you suddenly have to pay 5,000 rather than 4,000, which is only a week ago. So the markets do move quick, and availability can turn around, will soon, and actually have an impact on your balance. But it's not going to stick around for a long term. We know, at least, I didn't buy an AC at my place, so I hope the temperatures will drop in the long term anyway, and we will go into a regular autumn and even winter. So yeah, we should be steering on some of the fundamentals: milk price, marginal farms, how many cows we have towards the future, rather than really looking at what is the milk output today, because I don't think that really resembles what it should be like in the long term.
I think the key question we want to answer today is there's a certain amount of, of milk available. We're in a thin summer market. There's
Yep.
a volatile milk supply going on, I think heavily weather induced. And I think the key question that I would love to get an answer to at the end of this episode, Jasper, is this a shift in the market? Is this a temporary hiccup? What is happening? How much of it is fundamental? So will remain in the coming weeks, months, well, you name it. And how
Yep.
much of it is just a weather-induced hiccup? I saw, and I think that's today what you're going to show us. Sebi, also great to have you back. I'm seeing a lot of butter content come from your way.
Is there? What do you mean? A lot of cross sales happening to the platform?
Also, but I also follow you on Instagram. I also see a lot of butter content there.
Oh, there is a lot of butter, yeah.
Right, good to see that in both your personal and private
Lot
life, butter is
of
still
butter,
the key thing
indeed.
in your life. Well, looking forward to this. Jasper, where do we start?
Yeah, let's give a short 2-3 minute update on where today's dairy markets have landed, and then we'll go into each individual region that we'd like to focus on today. So that's Europe, US, and New Zealand. Looking at the market movements over the past week or two, we actually saw a bit of an upward trend for S&P again. There's a good amount of demand on the global dairy trade event this week, and well, both in the US and Europe, we do see that liquid market is slightly more tight. So that means that there's no real opportunity to produce cheap skim milk powder. Stocks are there, but we are also seeing that they're not that heavy. So a bit of demand really pushes it up, and that's exactly what we saw. Asian demand is good. Chinese, Southeast Asian demand is quite good, and then we quickly see that prices follow the trend upwards.
Are they mostly turning towards Oceania though? Probably, right?
A little bit, because what we're currently seeing is that the milk output in New Zealand is ramping up seasonally. Like we're at the start of the ramping up phase, but that means that Fonterra is offering a lot of volume. But the interesting part is all of that volume on offer, both for skimmed and whole milk, is absorbed immediately by all the buyers that are there, which is quite interesting because we have seen that they've been purchasing a lot already. H1 imports of some countries in Southeast Asia was actually really, really strong. And still they import a lot. So it's interesting to see how develops. But we definitely see that global demand pulls on that market. Butter, opposite way. It keeps on moving down. Zooming out to the 3-year view, it keeps on moving down bit by bit. There's a lot of stocked butter available. Demand's not bad, but it's definitely not good. And there we see that it just pushes all market prices down. And all three regions need exports to offset their markets.
And you believe regardless of what happens with cream this week and probably next week as well?
Yes. I can give you a lengthy answer, but I think the short answer is yes. There's too much on stock for this to really make an impact. Yes, we will have a few factories produce less butter this week. Absolutely. But I don't think it will hurt the overall supply.
Yeah, no, I think we saw it as well a month ago whenever we went on the 35, 38 degrees plus.
Yep.
It did have it had an impact, but short term.
Yep. It definitely had an impact on cream, for example.
Yeah.
Looking at whey, whey markets are actually quite peculiar. What we're seeing is prices have stabilized, but the range has widened massively. So we see a large range in prices with several producers offering Q4 above 27 still. But we also have some trades of traders and some buyers able to lock it in slightly below. So we see that range between, 24 to 28 euros currently, which is quite large. The US market, which I didn't even put in here, I see, but the US market has actually fallen slightly this week. It's marginal, but it's something, and it's definitely worth noting. Demand is turning there, and I personally don't predict that this has been the turning point. I don't feel like from now on we're going to plummet in price, because I do still feel like demand is strong enough to keep the entire market up. But we have seen a significant change. MPC, caseinates, other dairy proteins are really starting to play a much bigger role. And it could well be that WPC has reached its highest point a couple months ago.
Yeah, this is a very interesting market. And I believe that September is going to show us a lot of stuff. September, a lot of people go into negotiations for Q4. And I believe that if there is a big, often as what you have it in between the periods where there's a lot of negotiation, it's a bit calmer, so we don't see massive price shifts. But September is probably going to tell us a different story. It's either going to go one way or the other, but I don't believe it's really going to stay flat.
No,
especially with all the trading that's going to happen. September being the highest month.
Exactly, and so we'll see. We see more people coming back from holidays. It's increasing trading activity a little bit, but indeed the purchasing window is now starting for Q4. So we'll slowly see more offers and bids come in, and I've already seen prices move up slightly over the last few days because it's still a short market or a tight market. I don't think that has structurally changed, but the sentiment has definitely done its job over the last 2 months.
Clear.
And that's where I'd like to end at least this part of the market update. We see good demand for powders. We see a whey market that's kind of on edge. It could be turning, but we're not 100% certain yet. Butter remains weak. Cheese is still mostly sideways, so no real significant changes there. If anyone has some questions, please ask, and I'd love to answer them. I think for now, this is where I'd like to move over into the fundamentals update, because there's a lot to talk about when it comes to the long-term outlook for milk.
That's
right. And of course, there's 2 new reports for anybody looking for specific insights on any specific product. Yesterday, you published both butter, S&P, whole milk powder, and the whey ingredients report, or the protein ingredients report these days, because of course also milk proteins are covered. So I've added a small banner where you can go to these latest reports and read the full insights or ask our commodity co-pilot, of course.
Perfect. I think that's great. And that brings me to the first market that I'd actually like to cover, which is the European market. We will focus on US and New Zealand later, so don't worry. We'll try to cover everything while we can. We know that the milk output has been quite good. If we look at this volume actually with standardized at 30 days, we see that the milk output in 2026 has exceeded the values that we've seen throughout 2025 so far. But we also know that 2025 actually started to really be strong in H2. We've mentioned this many times before. We wouldn't be surprised if H1 numbers would be up. So it's exactly what we. I'm not saying that the crystal ball is perfect, but this is what we could foresee. But now that we are waiting on the final numbers for a few countries for June to really have the complete overview, we already have some individual countries available. We are starting to see, and I think French milk output is actually a great indicator for that, that the numbers throughout June and July, and I will show you the weekly numbers, are very volatile. I'm only going to look at 2025, 2026. If we look at the 2025 numbers, they are heavily, sorry, 2026, they're heavily fluctuating, which is purely due to the weather. Higher temperatures, they lower the milk output, and that's currently what we're seeing in that market. But the thing that we're looking for is, if I put 2024 back in there, where are we going to land? And the interesting part is currently what we see is that after falling quite heavily, we've rebounded quite quickly, and we're currently around those 2025 levels, which to me tells, and I know that this is preliminary, we still have a lot of time left.
Yeah.
There's so many that can still happen. But if we land more on those 2025 volumes, we will definitely have a significantly different market than if we go back to those 2024 or even earlier volumes. That will be the difference that we should be monitoring. And I talked about this with many traders, producers, also a few buyers. September, October, November are really the 3 months in which we'll see where milk output will land, because the impact of temperatures will lower by then. And we'll really have a look at, okay, how does milk output really fall? And even though we don't have 100% guarantee that will land where we expect it to land, we do have some early indicators that I want to kind of walk through right now.
Yeah, the fundamentals of...
Exactly. There's two things you need to focus on. A is the amount of cows available, and B is the milk price. The milk price leads to a milk margin, and on farms, that's generally leading to what drives milk production, exactly. What we see, I've pulled up the company milk price widget for that, is you can see the milk price average for June 2026. There's a slight delay because there's a bit of standardization that takes place from normalization. You can see the milk price of many different European cooperatives. And in this case, I would love always to use the Friesland Campina one, because they're one of the first to publish. And they're quite on average throughout the rest of the market. We actually see that the milk price of €403 per metric ton, slightly above the 40-cent mark, is still above what we expected to be the break-even point. We expected it to be that break-even point to be around 380. 360 in other countries.
We're well above them.
We're well above, and the latest levels, if we scroll down, actually are even higher. So 425 is actually what we're seeing in the Dutch milk price, which is kind of an indicator for the rest of the European market regarding milk as well. If we compare it, we don't see strong differences. Arla slightly lower, Capsa slightly higher, DMK, Dairy Gold were slightly lower, but overall it's really showing to be around that 40-cent mark, 40 cent per kilo, or 400 per metric ton. And a few of the lower ones, we also see that those are in countries where the milk price is actually less relevant, because, for example, in Kerry, it's more pasture based in Ireland. So milk price, I would like to give it a check. It's not as healthy as it was before. If we scroll down, for example, to mid 2025, or the reason why we had all this growth in milk production in H2 2026, sorry, 2025, margin was amazing. Like we're not reaching that, but ultimately it's not as bad as it was in 2023 or slightly earlier 2022, when we really saw that feed prices moved up. And in blue, we also have an indication of feed prices, which they're impacted by what's happening in the Middle East, but they're not going through the roof. So there's definitely, both on milk price and farm margin, we don't really see a strong reason why it should suddenly fall. It's not as healthy, but it's definitely not as bad. One other thing that we focus on, of course, is the amount of cows available. Sorry, before we go into the amount of cows available, before I mix up the story, one other thing, of course, that always has an impact is the weather.
Clearly.
That's kind of
especially
the volatile.
today,
there's the volatile element that's added on top. You can actually track heat stress. You can track the weather map. If we look at the temperature anomaly, so how much it deviates from usual, we can definitely see that France, Austria, I hope northern Italy, they're having the sunbeds out. Switzerland, the temperatures are much higher than usual. But also in the Netherlands, we're talking about a +1 to +3 degree change in the middle of summer. It's already warm, and now it's only getting warmer and warmer. Interestingly, heat stress on cows is not too bad. This helps us determine whether they're eating like usual, or they're eating less, or eating more.
And why would you explain that? Or how would you explain that?
It's a bit of a tricky one. First of all, I didn't know we had cows in Paris, but apparently we do have an heat stress index for the middle of Paris. But I feel like the overall heat stress is also a bit determined by humidity and by how long those higher temperatures stay around. And what we've seen in the past weeks is that temperatures fluctuate. So it's not like we have a heat dome like we had mid-June, where higher temperatures stick around for, let's say, 5-6 days. It really fluctuates, and it starts to shine through. That means that cows do get stress, but not at the extent that we would
they can
expect
cool
it to.
down as well during the evenings. The evenings are much cooler.
Yep. Exactly. So that does help. So on milk price and also weather, it's not great, and it increases volatility in the market, but it's actually not as bad as you might say. And that's when we would love to go into the total number of cows. For Europe, there is only really, really delayed data available. So what we do know is that the cow numbers over the past few years have actually been kept stable. We've seen a decreasing trend over the past years because of sustainability issues, high beef prices, which have all kind of forced some farmers to quit and lowered the herd size in total. But over the past years, it actually has been kept stable. So milk price is actually doing good, but the amount of cows is also holding up quite okay. So still, therefore, we don't expect, because the margin is that good, not as good as 2025, that the milk output will remain at the levels that we saw before. If we go back up, 2025 numbers H2 will be very hard to beat. But looking at what we're seeing right now, even though today might not be as good, I really expect that we will land quite close to those 2025 numbers if we look at European milk output.
Even with a margin that's clearly going to be less compared to last year. We have the same amount of cows, as you say.
Yep.
Okay.
I think so. And there are some things on top that for the long term might change a little bit, because, for example, Whey is becoming much more of a driving factor in revenue in several big cooperatives. So it might be that Whey might have a bit of a better impact on the milk price. So there are some good things that actually might help the milk price in the future. We know farming in Europe is not necessarily an easy job anymore. So hopefully that will bring some relief. But it will definitely be something that we will happily look out for if there's any change. But it looks positive for now.
Maybe, Jasper, to challenge you a little bit at the end of I think the European part of the milk fundamentals, we got a question, and I get it, it's a challenge because it's not just based on these fundamentals, but maybe we can ask you whether you can bring all of this together into a little bit of not a price prediction, but a little bit of an outlook on what you think in the market. The question we got is if there's any chance that sweet whey powder prices will go down in Q4 or early Q1 into 27 in Europe.
That is a
well, you briefly touched upon it already with WBC 80, and then you do believe in some way that we're not going to see the same levels that we have seen
exactly
in the past.
But the thing is, currently sweet whey is, and I talked about this in the highlights yesterday, so I think for a full detailed analysis, please look at the market analysis. But there's a support coming for sweet whey from the amount of liquid whey and whey concentrate that's available, which is very limited. All of the WPC, which we're seeing capacity expand, is actually it's going into WPC. So sweet whey isn't really produced at the same level that it used to do. So support is there. Latest few weeks we saw a bit of demand additionally from Asia, but I think that's not something that I'm counting on to stay. But I think that support level is so strong that I find it difficult to say that prices are really going to drop. There is a bit of protein in whey, but I don't really see the sweet whey being pulled up because of the protein demand. It's really that support level from a cost-based structure that's really strongly supporting this. Because if you have sweet whey concentrate around 1,200 euros a ton, your base minimum price is already 1,500-1,600. And I know that we're currently around 1,800, so there might be a bit of room, but based on that cost price difference, I don't see much change.
Yeah, that makes sense.
Clear. Thanks. So we go on to the US.
Yeah.
Always my favorite part.
Yeah,
it's a cowboy.
Feiko will be happy to see that dairy in the US is still on a growth trajectory. We have seen that the milk output is increasing year over year. And yes, we've had I'll actually click away some numbers. If you look at 2024, 25, 26, standardize it to 30 days, the growth in US milk output wasn't necessarily in H2. It was a thing of, well, basically all of 2025 was really, really good compared to 2024. If you look at 2023, that wasn't really where the growth started. But let's say 6 months before the Europe really started to see its milk output grow, the US already started growing. And at current pace, we actually foresee that that's going to stick around. Well, why? Same widget, interesting enough. But in here, we also track US milk prices. In this case, we're looking at it in euro. I can convert it to US dollar, even per hundredweight, where we generally look at. For the Europeans amongst us, it might look a bit counterintuitive right now, but this is how we tend to look at milk prices in the US. 18.20. A quick comparison easily tells you it's far below what Europe is paying.
Yeah.
Which is sounds
usual.
problematic, but it's actually quite
actually
common.
usual,
yeah. If you compare that price against what the European cooperatives have been paying, is actually already slightly better. There's a milk price system that makes sure that farmers do generally get quite a good return on their milk, or quite a good buck for their milk. And if we look at the milk margin, so we're going to be looking at the US margin, it's actually quite healthy. I'm seeing that everything also is in euro here, changing it to US dollar per metric ton. The margin is healthy. This really is supported by low feed prices, because feed prices have basically only been decreasing, a slight increase, but mostly been decreasing since 2022. And the milk price isn't great, but compared to what it has been in previous months, it's actually not looking too bad.
Yeah.
So the margin here is actually relatively good, and we expect that to really, well, stay positive in the months to come. For the US, however, there is one volume or one number that is available. It's by far the most interesting and important part of the US dairy market. We have a growth in herd size or dairy cow population that is exceptional. If we compare it to the previous years, it's been growing since, I think, mid 2024, and ever since we just keep on gaining more cows. The beef market is not happy, but dairy markets are.
But is that due to a strong margin in the dairy industry, or is it due to a bad margin in the cow industry?
No, there's a great margin in the cow industry, so that's not the problem. I think for this, I have to show an historical example. So here we see that July 2023 was when the margin was roughly at its lowest. You can take June, it's also relatively low, but if you mid 2023 was when we really started to see a shrink or a decrease in the profitability of dairy farming.
Mm-hmm.
And if and I'm clicking away some of the years after, if we look at when the dairy herd size started to shrink significantly for the last time in the US, we actually see that throughout 2023, and especially throughout June, July, and onwards, that's when we really start to see that decrease. So that margin that we can track quite easily in the US is highly crucial.
So this moves quite a bit and quite fast, actually. If we see this herd size actually decreasing quite significantly over the coming month, you can expect a US dairy or milk output to decrease as well because of it.
Exactly. And the margin stayed, somewhat mediocre throughout 2024 and really started to increase throughout H2 2024. And then also if we look again at the herd size is when H2 also started to increase. So farmers do react, slaughter less, buy any cows possible, but that's slightly more difficult because those prices are insanely high. But this is by far the most interesting thing to track for dairy markets. 2025 is exceptional, and then 2026 comes on top.
Yeah,
we have enough cows, and that's one of the most crucial things to have if you want to keep on growing your dairy milk output.
Yeah, clearly.
So that's what we see growing. And then on top of that, final quick thing before I go on to New Zealand is content is also up. So it's not just the absolute volumes of milk, it's actually milk fat as well. So here we see the absolute volume of milk fat, in this case, just the volume of milk multiplied by the fat percentage.
Yeah.
This has been growing year over year for more than 5 years, I can tell you. So it's...
Is it because of technology? Is there a lot of... What is driving this growth?
Well, cows are treated like factories a little bit in the US.
Yeah, you can measure everything. It's like a tech.
It's a bit of tech, but it's also they're being pumped with additional feed just to make sure that they produce as much milk and they have slightly higher fat content in that milk.
Yeah. So I think this is perfect because it ties it into the question that we just received. You just talked about the EU and the US. If you tie it all together, especially looking at fat and so here butter in that stage, do you think that EU butter will be more competitive on exports in H2 via US butter? And will that be enough to lower stock levels sustainably?
Not necessarily.
Yeah,
I feel like
so either,
the European reversal in we need to trigger more demand because there's a lot of stocks to eat through, and I think lowering prices have a role there, but I don't think the global export market's really playing a role.
Yeah, and I think the US price isn't. Do they have stock available or not?
The US doesn't have too much stock, but only because they're always pricing at a discount compared to Europe. So the US is just going to follow us down.
Exactly.
Then we don't really expect that. We rather see an increase in overall fat consumption for butter. We might move away from some oils, for example. So that's definitely something that we see happening. And yeah, it might just take a while before we have all those stocks removed.
Yeah, 100%.
With only 3 minutes left, I think it's a good time to try to get Oceania or New Zealand in there. As they're ramping up, of course, milk production.
Yep. In New Zealand, we of course have a slightly different milk season. It also follows spring, summer, fall, and winter, but their winters are different. Their summers are different, just half a year. So what we see is that we really have a strong seasonality there. The season starts in June, July, which are the low months, so we don't really expect a high milk output in those months. But currently, the outlook for Q3 and also Q4 is actually really, really good when it comes to milk output in New Zealand. Why? One, rather than the herd size, which is not necessarily something that's tracked in New Zealand, it's the weather and it's also the milk price that we have there. I'm actually starting with the milk price because, again, we have the same company milk price widget. We also have Fonterra in there, so you can track the Fonterra milk price as well. This is compared to the Europeans, again, slightly lower. Why? Because we don't really give it a lot of additional power feed to cows in New Zealand. We do give some palm kernel cake if the price is right or if the grass is not that good. But ultimately, it's a pasture-based system, so those are the most important things to track. We currently see that the milk price still is healthy, so it's supportive of quite good milk output, and any supplementary feed will be able to be bought by farmers because of this price.
Yeah.
But the pasture growth index is actually where we see the main change. There's a lot of things for moving around at the same time. I love to click the daily pasture growth index, so basically how good your pasture is between 0 and 1. Click it away and use the 30-day rolling average compared to the 5-year average. So what we see is that, for example, in 2026, so far, we saw the 30-day rolling average was far above 5-year average. Means grass has been good. Yes, it's been lowering towards towards winter. So that made sense. But we're currently seeing that the grass growth and the pasture index quality is actually, it's quite okay. It's on par with what we would expect for the 5-year average. And we know with El Niño on the way, there is a bit of concern. And I don't want to flatten all of those concerns and say it should be fine, because El Niño will have impact on the Southern Hemisphere, especially Latin America and a bit in Oceania. But it currently looks like or at least history has proven that in New Zealand, the appearance of El Niño has not necessarily increased temperatures too much. It has only decreased soil moisture very, very lightly. So we don't expect that when usually this thing ramps up seasonally because grass grows in spring, we don't really expect a big fallback right now. So that's why the current milk output in New Zealand, it might not be amazing if we look at the current pasture index, but we don't expect that the pasture index is going to fall behind its growth trajectory in the coming months. Okay. So it's really, quite a positive outlook, especially from US and New Zealand.
Yeah. But weather can change quickly, right? So I think that's a big thing. Weather can change quickly, and especially there with the pasture growth system.
Yeah.
Can have a big impact.
So Jasper, maybe quickly summarizing across the 3 regions, we know milk production is a combination of yield and amount of and herd size.
Yep.
Do I understand correctly that the herd size is actually doing quite well across regions? We don't see big issues there, but we see some yield issues
Yeah.
induced by the latest weather trends.
Yep.
And if we look at the incentives for the farmers, and you've shown us that farmers do respond to these incentives, the incentives are actually still, they've decreased from where they were, maybe, especially in Europe, but they are still not bad.
No, and actually improving. Whey is taking a slightly bigger role and pushing it up. Milk powders are actually doing better right now than they did last year. It's just butter that pushes it down. But yeah, that seems to have found this bottom for now. So yeah, it really looks like the profitability on farms has surpassed its lowest point. If all stays the same, of course.
Clear. Well, maybe for in 2 weeks' time, Seb, there's one question we didn't answer in the chat. Maybe you can prepare a little bit for that and come back to us with the answer in 2 weeks' time about how climate change is accelerating the adoption of climate-controlled housing for dairy farms. It would be great if you have a clear answer in the next episode.
I think it's quite clear. But
I want to thank you all for joining us today. Jasper, I want to thank you together with Seb for walking us through these 3 markets. I know it's a lot to cover, a lot of ground to cover in only a 30-minute window. So probably you'll see more of this coming through to the reports that you write. US Weekly is coming out tomorrow. Maybe in a later episode we'll zoom in a bit further. If there are any questions that you still have, feel free to send an email to any of us 3. Really happy to be in contact with you, get some insights from your side, and of course answer it in the next episode in 2 weeks' time.
Great. Thanks everybody.
Sounds good. Thanks everyone.
Thanks guys.
Bye bye.